Crypto products and NFTs are unregulated and can be highly risky. There may be no regulatory recourse for any loss from such transactions.
A lot of crypto investors are a bit tense because of the crash. But today we'll explore if this is a time to exit or buy. That is for later to come. But we'll begin with big stories of the week. We'll also explain what Web 3.0 is, and then there is a lot of chatter about Bitcoin Loophole as well. There's a lot of articles popping up on a lot of platforms. We'll discover what that is and if it is a scam or legit. So let's begin the show with the big stories of the week. I'm Arun Singh. The show is called Coffee and Crypto. Starting with G7, that is a group of 7, which is an intergovernmental political forum. They called for a swift and comprehensive regulation of cryptocurrencies following turmoil. This came from the finance heads of the G7, and the turmoil they mentioned is the demise of the Terra stablecoin that happened last week. We had covered this on our show as well. We did a full explainer on what Terra is and what the terror was that it brought with it. Now, taking hints from that terror that their stablecoin brought for them, Tether, the world's largest stablecoin, said it had boosted its holdings of US government debt while cutting exposure to riskier assets. Financial regulators worldwide have warned that stablecoins could risk wider financial stability, with Britain among other major economies looking to regulate the sector. Moving ahead, authorities in Iran have shut shop on 6,914 crypto farms operating in the country without a valid license over the past 2 years. It's a very crucial step that they've taken. The local authorities have been cracking down on illegal crypto mining operations since 2020, when the management of the national power grid started to point the finger at crypto mining for putting on Iran's energy supply. Back home, here in India, SEBI, that's Securities and Exchange Board of India, has suggested that no prominent public figures, including celebrities, sportsmen, should endorse crypto products, and the advertisement disclosure should also talk about possible violation of the laws. Moving ahead, unidentified persons hacked the official Twitter account of Chhattisgarh governor for a few hours on Thursday and put out posts about cryptocurrency before it was recovered, the official said. Now, the account broadcast information about official activities of Governor Anusua UK, and we've also reported in the past, in December last year, when a similar kind of hack was also carried out on PM Modi's account in December last year, when a tweet about Bitcoin was done from his account. That's all for big stories of the week, but now comes the explainer, the big explainers of today's episode, that is on Web 3.0. Before I start explaining what Web 3.0 is, I want you to see this tweet, which is, of course, by one and only Elon Musk. He had once tweeted, "Has anyone seen Web 3? I can't find it." When he had tweeted this, of course, there was a lot of chatter on Web 3, and this is what we're going to explain in today's episode. Before we get on to that, let's tell you what was Web 1. So it is the internet we all know and have used and have been using as well. And then came Web 2.0. What was Web 2.0? Now, that was the user-generated web. Again, we're using it today as it's a world ruled by social media. It's all UGC, user-generated content. But now comes the question, what is Web 3.0? It's essentially work in progress at the moment. Rather than controlled by governments and corporations, the main principle of this is that the web becomes decentralized. Whatever we're using at the moment is governed by someone, right? Also by the government. But the essence of Web 3.0 is that it becomes decentralized, and that is where the blockchain comes to form the base of it. No one central authority controls it. And as we all know, that's the essence of blockchain. No one person controls it. Now, here are some key features of it. Number one, democratic data control. Again, that comes from blockchain. Then there's smart accessibility of information. Then there's personalized browsing, which is powered by AI. And then there is one key to access content, applications, and also stores. Gavin Wood, described as the father of Web 3.0, explains that platforms and apps built on Web 3 won't be owned by a central gatekeeper, but rather by users like you and me. But there are some important elements that we really need to talk about when we talk about Web 3.0. First is DAO. We've explained this in our previous episodes what DAO is, but I'll give you a brief explanation of it here. DAO is a decentralized autonomous organization. It is described as a group, company, or collective that have their own rules and regulations which are coded into a blockchain. So that is one part of it. Then there is AI. Web applications will need some decision making and communication between devices, which can be automated with AI, and that is artificial intelligence. It can run these apps. But what about the front end of it? Metaverse becomes the front end of it, the user interface through which we interact. We'll interact with the online world, communicate with other users in an immersive reality in Metaverse. So that was my explainer on Web 3.0, which is, let's say, a reality and also a possible future for us. We'll also have this discussed with our guests who are joining us this evening. There's Nitin Sharma, General Partner and Co-founder, Antler India. He's Global Web3 Lead as well. Then there's Malik Kodadia as well, Co-founder and Chairman, Finnovation Lab. Very warm welcome to both of you, Mr. Kotadia. First, we'll begin with you. Of course, we're talking about Web 3.0. We've explained what it is, but if you can give us a real-world example of Web 3.0.
Certainly, and it's a pleasure to be here on your show again.
Do you want to take few seconds to set up, and I'll quickly go to Mr. Sharma here, and I'm also enjoying my coffee here on Coffee and Crypto while I sip this, and Mr. Kotadia, and there you have Mr. Sharma also sipping his coffee. Give us a real world example of 3.0.
Yeah, well, it's wonderful weather in Bangalore for coffee. So look, I think you did a great job, Arun, explaining the basics of Web3, and it's a great question. What is it today? What is it being used for? What are the right examples? I would say, a few come to mind. Mm-hmm. First of all, the infrastructure itself that we are so used to in a centralized fashion with Amazon or Google, that is getting decentralized. It's still early days, but there are projects like Helium, which is trying to do a decentralized version of a telecom company.
Sure.
So a telecom company is usually a monopoly in many markets, and they are trying to create a telco network with essentially peer-to-peer users as the nodes. Another example, which many of your listeners would have heard probably, is a project called Filecoin. So they are trying to do decentralized storage, and instead of us having to pay Google or Dropbox and relying on a centralized entity, can we make that something decentralized? And so on and so forth. When you think about the infrastructure, right? Storage, computing, content delivery networks, there are some interesting real world applications coming up. Still early days, but they are working much better than the last cycle I saw in 2017 when these were just hype. Today, the technology has matured. The second category of real world, that is real world applications that are out there, are really what I would describe as the combination of DAOs and NFTs, which you covered already.
But would you call it a thing of future or a reality?
So, there are some interesting things already happening. So in the public media, there is a lot that's been discussed about how people got together and formed a DAO and bought works of art or a copy of the US Constitution, those kinds of things. Music is getting decentralized through that. For me, a very interesting example is a project I had personally invested in called Molecule DAO, which is trying to actually disrupt how drugs are developed. So today, unless a big pharma company wants to put in $1 billion, they do not even start on a new drug. So many drugs don't even get developed.
Right.
What Web3 elements of DAOs and NFTs are enabling is Molecule is taking this and getting a crowd-funded method to start new drug development funding.
Okay. But I mean, the overall, motive of any technology is to give us a great user utility. Mr. Kotadia, how is Web 3.0 being able to provide that, or will be able to provide greater user utility, because that's the end use of it?
Thank you. That's an important question, and I'll just carry on from where Nitin left. Actually, if you look at some other real-world applications of Web 3.0, there is a lot happening around data sovereignty. Technologies like data wallets, sharding, etc. They will all be powered by Web 3.0, and they've been around and gaining popularity for some time. So that's the first thing. The other thing is, it is human nature that we care for something that we own or where our incentives are aligned to the platform, which was not exactly the case in Web 2.0, where all your data was owned by the tech giants like Facebooks or Googles or Amazons or Apples of the world. And the platform economy kind of evolved that way, but it was not entirely that. Now, if you combine these two forces, and I call them the 3Ds of data sovereignty, decentralization, and distributed ownership, then in this new economy, whether it will be the real economy as we call it now, or whether in 10-15 years the metaverse economy, there will be a significant boost. And I want to just conclude by saying that this is something I have been consistently sharing on your show as well, that crypto tokens, they are not meant to be, and they can't be a killer application of Web 3.0 in itself, but they can power such killer applications or important applications such as the metaverse or embedded commerce. I think that's what we need to recognize and understand.
Yeah, interesting that you mentioned crypto coins, and I would like to go to Mr. Sharma here. I mean, the show is called Coffee and Crypto, and I also want to bring it back to cryptocurrency and crypto tokens and coins. What is Web 3.0 going to do to cryptocurrency?
So obviously, the first thing that we must remember is let's talk about digital assets, not cryptocurrency, because some people get confused. So if we just think of digital assets as a new asset class, all of these native tokens which might be powering some of the applications we are talking about will become valuable because of usage. Today, they are only valuable because of speculation. So today, it is all about the promise of the future, right? But if Web3 projects actually take off, if all of these things we are talking about, from real world DAOs to drug discovery to new telcos and file storage and self-sovereign identity, if this becomes mainstream, then these tokens will actually be used in huge numbers of users. So just like we can value things more fundamentally, we will be able to do that in that future. So, the whole criticism of digital assets being only speculative will start to go away. So in that sense, it's a great, it's actually the next step in the evolution of this whole new world. But of course, it will take some time.
Sure. Mr. Kotaria, just last quick question, again linked to the finance part of it. What can it do to the finance world other than the basic crypto trading?
Thank you. This is an important question. And since I come from about 20 years of global banking experience, I'll share how this goes well beyond just crypto and trading. So if you look at the last 35 years of development driven by technology and internet in banking, it's all been around the concept of destination banking, whether it means you go to the ATM or the branch or the contact center or even the internet banking website or mobile banking app, or you use your plastic credit card. You're always going to your bank or you are actively using the bank. But over the last couple of years or few years, we are now seeing a new concept in finance called embedded finance, which means, or I call it ambient banking. In a very simple way, you can say that it is banking and transactions happening everywhere, but the bank is somewhere in the background and you don't really know or care. And whether you look at examples like Amazon Go or even sitting, ride hailing, etc., the transactions just happen in the background. Now, I genuinely believe that while Web 2.0 has enabled this, Web 3.0 can be the native layer of this embedded finance revolution. Just as Web 1.0 was to internationalize or information in finance, and Web 2.0 was about transactional finance, Web 3.0 can be the embedded or the native layer of this embedded finance revolution.
Sure. So exciting times for all of us. Thank you, gentlemen, for talking to us and joining us for this conversation. With that, we'll quickly go to our next segment, which is brought to you by you, from you, and for you. It's called MCQ, which is My Crypto Queries. And we have Rohas Nagpal for that with us. A very warm welcome, Mr. Rohas. He's a regular on our show and he decodes the stuff in a very easy and snackable way. He's author of the Crypto Playbook as well. I want to begin the segment with my personal question, which is crypto crash a good time to buy or exit?
That's a very good question. So we usually say that buy when the market is scared and
Yeah.
sell when the market is greedy. But I don't think that rule applies as of right now, because what we are seeing is a very major correction in the way we look at crypto. And this is primarily because of the crash of Terra or Luna. That was one of the most respected projects. I have also stated so many times that I am very bullish on that project. But its collapse is now making everyone question which are the other ones that are now going to start collapsing. Now we are actually looking at all cryptos and thinking, what does this do? And if it doesn't do anything, is it again going to be now heading for a crash? So I think as of right now, it's not a good time to buy. Even though everyone's afraid, I think it's a good time to be afraid.
Sure. Let's quickly take Azhar's question. Please update me about Loopring.
Sure. So Loopring is actually a very interesting project. It is the first scalable DEX protocol, which is a decentralized exchange protocol. So if you use Loopring, you can build your own high performance cryptocurrency decentralized exchange, where users are happy because you're not taking custody of their crypto. They are keeping their own keys with themselves. And because Loopring is using something called ZK rollup, which is a layer 2 scalability of Ethereum, it is able to give us speeds of 2000 trades per second. So I think it's a very, very good project.
Okay, and please don't confuse it with Bitcoin Loophole, which we are going to discuss later in the show. Then there's Ria's question, how can beginners invest in crypto?
So if you're a beginner, I would say first start with airdrop. That basically means that all the new cryptos that are coming out, they make you do simple tasks and in return they give you free cryptos. So if you're new, please begin like that. Zero investment, just invest a little time. Then there are lots of cryptos giving you learn and earn, which means they will make you watch some videos, take a quiz. And in return for learning about a new project, they will give you free cryptos. There are also things like move and earn and other things which have started that if you jog a certain number of kilometers, you will get free cryptos. So if you are a beginner, I would say just go for free cryptos. Now is not a good time.
Go the reward way is what you're suggesting, I believe.
Pardon?
Go the reward way. I mean,
yes, go the reward way.
Get rewarded for gaining the knowledge that you want. And then comes your favorite topic, which Hussain has raised. He's asking, can we still trade in Luna? Any chances of it being listed again?
Well, I would say 99.9% Luna is over.
Okay.
But there is always a 0.1% chance. So if you already have it, please don't delete it. There is a 0.1% chance it may revive, but 99.9% I think it's over.
Rishi is asking, is it the right time to buy Bitcoin? And it's very important to ask this because this is, the biggest cryptocurrency and these are some of the worst times maybe, if we are safe to say that.
Yes, I would say now is not a good time again, because I would say that the entire crypto industry right now is going through a complete rethink. Everyone is rethinking every single investment. So I would say give it some time, let things stabilize, but don't jump in.
Sure, that's all the questions that we had for MCQ. But after the break, we'll be discussing Bitcoin Loophole. For that, Rohas will stay with us and we'll be also joined by Mr. Ajit Khurana. Don't go anywhere. Bitcoin Loophole is emerging on the internet and there are a lot of articles about this being scam or legit. We'll decide what this is with our experts. Don't go anywhere. Keep watching Coffin Crypto. Hi, I'm Anand Singh. You're watching Coffee and Crypto, and there's one colleague of mine who came up to me and he's like, since you do this crypto show, I want you to see something. I came across this article. This says, go invest in Bitcoin Loophole, and the team was apparently in a very popular show called Shark Tank as well, and they've been all around the news. This is what this article says. Do you think I should go for it? And I was like, let me search about this. And then there were so many articles which talked about it being a scam, and then there were few who were claiming this is legit. So I went on their website and researched what that is. So what is Bitcoin Loophole is what we'll begin with, and if it is a scam or legit thing, then that we'll discover with our guests. So what is it? It's an automated trading software that trades the crypto market based on coded algorithms. It uses high frequency trading to help you trade around the clock. As for the platform, the app is AI integrated to allow it to gauge overall crypto market sentiment so as to maximize profits in both trending and non-trending markets. The point of contention here, which we read on the website, is Bitcoin Loophole ensures that you can easily earn massive profits out of the lucrative and exciting cryptocurrency market. These are their words, which we've exactly copy pasted from their website, which says Bitcoin Loophole ensures that you can easily earn massive profits. So yeah, that should raise your eyebrows. But then the minimum capital amount needed for investment is $250. So what is the controversy? So usually such apps operating on automated commands are looked at with skepticism. This is something that our experts have also been pointing out in previous episodes. Then it promises massive profits. And on the other hand, there are some tweets or social media claims asking people to join it along with some false facts. For example, this one. This is of course posted by a crypto reporter, but there's a picture in this tweet which if we can show that picture which is there in the tweet. So that actually showed an article from a news publication which claimed that, Azim Premji has talked about this and he's hailing this scheme or app. That's absolutely fake and false news. But what is Bitcoin Loophole is what you've understood. Now we'll go to our guests. We'll quickly go to Mr. Rohas Nagpal. He's there. He was there in MCQ as well. You know him already. He's Chief Blockchain Architect of Hi-Fi Blockchain. Then we have Mr. Ajit Khurana, Founder, Reflexical. Welcome, both gentlemen. Now, what is your analysis, Mr. Khurana? You'll have to unmute yourself.
Always a good idea to unmute. Thank you. Yeah, so I was saying that it is dangerous to call somebody scam on TV because that could have real ramifications. So I'll tell you 2 or 3 interesting things. Number 1, I would not participate in this. Number 2, I find that the wording on their website, some of which you actually expressed, very cunning. So for example, if I say you can make a lot of profit, that's very different than saying you will make a lot of profit. So for example, tomorrow, anybody who is in the finance sector could say, you know what, invest in this stock, mutual fund or whatever, you can make a lot of profit, which is always true, you can, right? In the previous segment, Rohas Nagpal said that there's a very, very tiny chance that Luna might be back. So you can make a profit on Luna. That doesn't make it right to invest in Luna. Third thing is that by itself, algorithmic trading, there's nothing wrong with it. There have not been any spectacular successes that have lasted for prolonged periods of time. None, whether in the stock market, forex market or crypto market. But there are these pockets of successes. So there could be pockets of successes that occur. But at the same time, I personally would say that the indications they give, such as 85% of the time we are right or 99.99% of the time our system is working, these numbers are very indirect numbers. They do not give any indication of the returns that you can make. If my son came to me and asked me, should I do this? I would say never.
Mr. Nagpal, what's your quick analysis? And then, of course, I'll have some more questions.
So I totally agree with Khuranaji on this. We've always been skeptical of these automated trading bots and all, because for someone to make money, someone has to lose money. Now, if every bot says I am successful 90% of the time, then the question to ask is who's paying for all this profit? If I'm profiting, someone else has to lose. So no, I think it is very, very shady. I mean, I obviously wouldn't want to call anything a scam, but if anyone guarantees you high returns, it is definitely very shady.
Yeah, I totally agree. I mean, with you, both of you, where you said you can't really outrightly call it a scam, and also in their defense, I think all these false claims that are being made are all like user generated. There are multiple articles on different platforms, and there are tweets where there are news articles displaying all of these claims and also these Shark Tank claims as well. Those are not made by Bitcoin Loophole. Their website says, no, we are not a scam. By the way, in their MCQs, there's one question, is Bitcoin Loophole a scam? And they answer it saying, no, it is not a scam, because they are also well aware about this, that there is a chatter about them being a scam. So they answer this in their MCQs as well if you go on their website. But Mr. Nagpal, coming back to this, I mean, we were chatting about this before this discussion as well, and then you said, sometimes one issue that one should raise with algorithmic apps is that, how do these apps operate during the crash time? That's another, point that one can pick.
Absolutely, I totally agree with that. So in fact, I request that maybe in one of your future shows, you should call these people who run these automated bots and tell them to prove on live television how they have performed during that time when Bitcoin and all other cryptos were falling by huge amount. Also, did their bots realize that Luna is going to fail? So Luna went from like 100 to 0. What was the reaction of the bots? Can they prove it? After all, everything should be on the blockchain. So maybe you could do a show where you ask them to prove, and all the different apps prove how they performed during this crash.
And as I
very
was saying,
skeptical.
few of our guests have actually raised concern on algorithmic apps, and you were one of those. But Mr. Khurana, on the other hand, you seem to be a bit of a, if not fan, but you're okay with these, right? Algorithmic
No,
apps.
see, in principle, if you are a trader, I'm not a trader, I'm an investor, but if you're a trader, you use some mechanism, right? You use some intuition, you use some data. If that intuition, logic, or data can be put into a program, it becomes an algorithm. So there's nothing inherently wrong with an algorithm. But to believe that you have struck upon the magic formula, which not just will succeed, but succeed for a prolonged period, I find that completely unbelievable. I would like to add one more thing, Arun, if you will allow me, where you said that a lot of positive things about Bitcoin Loophole were not on their official website, but on other websites. I must alert everybody to the fact that this is actually a very common scam technique. Without saying that Bitcoin Loophole is a scam, what MLMs, network marketing, Ponzi's, etc. will do is on their official website, they won't write it, but they will get this written on a whole host of other websites through news wires, press release, social media, etc. So actually it is them saying it themselves. That's a distinct possibility.
Sure, that's all the time that we had for this show, but definitely if you run algorithmic app, please come ahead and join us on the show. I'm called Arun Singh. You can find me on social media, and please be a part of our show and prove if algorithmic apps can actually do wonders for investors. That's all the time that we had for Coffee and Crypto. I'm Arun Singh. It's goodbye from my side. Bye.
Crypto products and NFTs are unregulated and can be highly risky. There may be no regulatory recourse for any loss from such transactions.